Hello and welcome to Health Affairs This Week. I'm your host, Jeff Byers. We're recording on May 22nd, 2025. This week, we released our first trend report to insiders. It's on the use of AI in healthcare, and we've been told it's, quote, a really helpful resource as someone who works in the AI regulatory space, unquote. Join Insider for $180 a year, and you can get that trend report as well as exclusive access to our May 29th event on the changes at the FDA and our June 17th event, where J. Michael McWilliams will explain risk adjustment trends. Today on the pod, we have Christina Farr, Managing Director at Manat, founder and GP at Scrub, and editor-in-chief at Second Opinion Media to talk about the state of the digital health industry and more. When the news dropped that Hinge Health was going to IPO, Christina was the first person I thought of to have on this pod to discuss. And then we were blessed with the news that Omada Health dropped its S1 filing to make this an even more timely conversation. And on top of that, we're recording on the day when Hinge is expected to open on the New York Stock Exchange at $32 a share upon open. Christina and I have known each other for a little bit in the digital space, but this is our first time speaking face-to-face virtually, much like our conversation with Bob Herman, which you can check out in the archives. I'm looking forward to this. Christina, welcome to the program.
Oh my gosh, thanks for having me on, and so much to talk about.
Yeah. As I mentioned, you were the first person I thought of. You do such a great job of explaining your insights in your Second Opinion newsletter. And it kind of seems like digital health is kind of having a moment again. So taking the Omada and the Hinge Health developments, what's a narrative you can give our listeners for digital health industry at this time?
Yeah, so this was really important news for the industry because we had just not had a lot of exit activity for quite a while. It was very I called it kind of like the IPO winter for digital health, and it went on for several years. And so what does that mean? Well, for the venture market, for venture all the way through to growth equity and beyond, which is all the funding that happens before a company goes public. A lot of that gets impacted because investors need to know in the private markets how to value these businesses based on how the public markets will react to them. And there was just so little data out there. And so no one really knew. And I think that uncertainty has created some problems with getting companies in this space funded. And now I think we've got these two upcoming IPOs that will really test investors in the public markets' interest in this category. How much do they understand this category? It's still very emergent and very nascent. And I think the other challenge is, are these tech companies or are they healthcare companies? And because they sit right in the middle, it's really questionable. And you have to go into the fundamentals of each business to determine where it sits. And that has an impact, which we can talk about, on revenue multiples, which you're starting to see now with both Hinge and Omada. So I've been tracking both of these really closely for that reason. And it's also why you see all these hilarious jokes from industry operators and digital health CEOs on social media saying, like, everybody, we all need to rally and buy shares in Hinge and Omada because how these companies perform will dictate how everybody else will be able to raise capital in the next couple of years.
Yeah, hold the line, right?
Exactly. So important.
You noted Omada in your newsletter was very much part of the second wave of digital health companies. And you kind of already mentioned this in what you were talking about. Just for listeners that may not be aware of the digital health space, so we mostly focus to a health policy realm, what can you tell us about what that second wave is? So you talked about is it a tech company? Is it a healthcare company? What are the main features of the second wave?
Yeah, so I would think of the first wave as your sort of 1.0 telehealth company. The innovation there was, let's take a typical kind of visit that happens between a doctor and a patient and put it online. And I would argue that these businesses ultimately struggled because it's just there's no defensibility, there's no moat. So anyone could come along, in theory, and start a telehealth business. And then that creates a lot of pricing pressure over time, which is really what happened to many of the companies in sort of this Gen 1 space. And then this I would say the next generation is really the true blue digital health companies that tend to take, the interventions, and try to, provide them as conveniently as possible, with the focus on really a new buyer, which has historically been more health plans and even systems, and is now, for this generation, increasingly the employer was the purchaser, which you saw both with Hinge and Omada, and it's really where they got their start. And they're not just telehealth businesses. They use a variety of different interventions. It could be, wearable device. It could be, a physical therapy session, augmented with AI, which is what Hinge offers. And then they try to provide these interventions in a cost-effective way, and ensure that they actually do work. And now there are questions around that too, which we can get into. But they are more sophisticated offerings, and I would say both Hinge and Armada, I would refer to as classic digital health companies, really from the start.
Yeah, let's dive into that. Both companies take this approach of like trying to get patients or individuals to do something, right? Trying to change their behavior.
Yes, exactly.
And I don't know about you, but I know it's really hard to can change my behavior as well. So like getting a large group of people to change their behaviors, especially under the notion of like this is going to be healthier for you, I think is a noble task. So like how have they been performing?
So I think your question is a really good one, and it's also complicated because behavior change is very hard, and we all know that from those of your listeners in the policy world certainly do know that. But then there are conditions where it's, not not as challenging as others. I would say for Omada, which is really in this sort of area of chronic disease, diabetes, pre-diabetes, I would say that is a much harder task because you're dealing with something that is chronic, and that individual may have had that condition because of certain lifestyle choices, and those lifestyle choices there's so many social factors and other factors outside of even healthcare that contribute to that. And so being able to reach these people effectively with tech is just tough. And meanwhile, something like a Hinge, which is in this kind of musculoskeletal area, people who have suddenly got very severe, like a good friend of mine just recently had back surgery, and it was absolutely crippling what he went through, the level of pain. So it's very acute when it happens. And if you're indicated for surgery, in the cases where you are indicated, you can have fairly quick relief. If there is a path, with physical therapy, which there often is, then you can also over time get that relief, and you go from something that feels very acute and very episodic to feeling like you can be productive again and get back to your life. And so I think Hinge chose a category where the behavior change aspect was, I wouldn't say easier, but where it's just much more clear how to be able to reach the individual in that moment, and then make sure that they're on a path that can get them quick results.
So you said get productive and get back to your life. I love that phrase because it makes me think these companies are selling to employers, right? So if you can get productive and get back on with your life, that's a lot of that is work for a lot of people and be productive for companies. So pretty big case point for selling to the employer market. Is this what the digital health landscape is currently, of like trying to find the employer point solutions to sell into? Or like given these two companies, what does that say about the digital health market?
Yeah, so taking a step back, I would say most of these companies did start with the employer. And the reason for that was like 15 years ago, employers started to be more willing to accept some of these point solutions for their members. They were starting to, so many of them were self-insured. So, because they were taking on the financial risk, they were able to be more flexible with the benefits they offered. And the digital health companies came along and said, here are some of your biggest areas of spend. We have offerings in these exact areas, and we can really move the needle. And in some cases they have, and in others they haven't. And I think we're still learning kind of what the best practices are here. And employers have moved from kind of styles of contracting that were much more kind of sweeping to contracting based on who's actually using the product and if the product is even working as described. So, things have changed over the last kind of 10 to 15 years. But for both companies and really the landscape overall, the employer is where they started. And in theory, sales cycles were a little bit quicker and easier than selling into health plans. And these were big contracts in the case of the jumbo employers. You could see that you can get to hundreds of millions in revenue with just kind of a relatively small number of very large contracts. The challenge is there's only so many of these big employers to go around. And when we continue to invest in these businesses and create categories with, say 4, 5, 6 companies in each category, what happens next? Pricing pressure. And that, of course, affects the financial trajectory of these businesses. So, where do they go next? And I think that's the big question as this next generation is hitting the public markets. Can they crack Medicaid? Can they crack Medicare? How about, health plans? What about consumers? What are the other pathways open to them to make money outside of the employer? And it's incumbent on all these businesses to prove they can do it, I believe, to have real sustainability.
So we touched on the where they could go next. I did want to ask you, you're the founder and GP at Scrub. When you look or take pitches, what does it take for companies to stand out from a digital health perspective when you're in that room?
Yeah, it's a great question. I actually just wrote a book about storytelling, and that book's coming out in the fall. We can talk more about it closer to the time, but I'm actually really interested in backing good storytellers. I think if you can tell a good story to an investor, you're more likely to be able to tell a good story to all the other stakeholders that you need on your side to be effective. Whether that's customers, whether it's potential hires, whether it's the media. So if I find myself riveted by a presentation, then to me that's a good sign for the business overall. So I am looking for that, and then I'm looking for things that are new and different that I haven't seen a million times before. I'm looking for companies that are not just kind of greasing the wheels and making the existing system even worse than it is. I'm interested in companies that are trying to change healthcare and make it better. And then, beyond that, it's like all the obvious stuff. Like you want decent metrics and growth and, all the things that financial investors look for. So if I can find that trifecta of good story, big impact, and solid business fundamentals, then I'm in.
That's great to hear about the storytelling. Yeah, I think storytelling is such a fantastic part, especially in a company's life cycle, because if you, in some ways, reality is perception. So if you can tell a story that changes the perception of your company and sell that idea to Wall Street, I'm sure it makes a handier investment down the line.
Yes, I agree with that. And I think sometimes, which is why I wrote the book, like, people say, oh, you're a good storyteller, so therefore you're not a good operator. And I just think that's a false dichotomy. I've met plenty of good operators who are also good storytellers. And guess what? It's like having a superpower. You stand out in the category. And, for me, like if I can find somebody who's got both skill sets, then I ultimately just see a winner.
And what's the book called?
The Storyteller's Advantage.
Is that out for pre-order yet?
It is out for pre-order as of literally this week. So yeah, haven't announced it yet, but it's out for pre-order. For as you all know, for authors, pre-orders are everything. So if anybody's interested in the book, then let me know.
Well, fantastic. We'll put the link in the show notes, and hopefully we can have you back on to talk about that when it's released later this fall. Two questions before we go. One, on Hinge and Omada, is there anything that we didn't touch on about how this relates to the state of digital health industry? I know we had a wide-ranging conversation there.
Yeah, I think it's interesting to sort of compare the two businesses. Even they're wildly different. They're in different categories, but I had an interesting afternoon just kind of looking at both S1s and thinking about the differences between the two, because it's inevitable that they will be compared against each other, both being kind of from the same category and in digital health and whatnot. I do think it's really interesting that Omada is an older company, started in 2011, while Hinge was right around 2014. So it got me thinking a lot about this kind of fallacy of the first mover advantage in digital health, and I actually think there's value in the second or even third or fourth movers advantage, and that's in because this space is so new. Like Omada had to write so many of the playbooks. Like they had to figure out, they had to spent a lot of money and time figuring out how to make that business work. And I think ultimately they made some huge realizations. Like, you have to be a virtual clinic, you got to be a provider, you can't just be a vendor. And that was something they had to learn in the course of building this business because it was such a new area. And so anyone who came along later, like Hinge, would have been able to look at Omada and basically, spend years less kind of making the same mistakes, and just piggyback off of a lot of that learning and growth that Omada had to do. And I think I can think of many other examples in different categories, but I think it's like in this space, it's actually very helpful to not be first. And I think that'll be continue to be true for a while until we reach some kind of maturity.
Yeah, I'm so glad you touched on that because I was wondering if so it's 2025. People can do the math. It's like 14 years for Omada, 13, the other number for Hinge Health. When you're with clients and advising them or in the room with founders, do you give them a sense that this is a long game, or is there a push to like get to 10x as quickly as possible, or like for digital health specifically?
Yeah, I mean, I tell them it's a long game. If you want to make money quickly, then I can think of quite a lot of other ways to do that. That is not starting a venture-backed digital health business.
Right.
I also spend a lot of time with founders, whether they be clients or any just people I know, thinking through kind of how do you want to build this business. And I think a lot of people, because of the like low interest rate era, sort of jump immediately to this idea of venture capital as the be end all, and they believe that you need this kind of money in order to build a business in healthcare, but a lot of companies don't and shouldn't. If you want to build something that has hockey stick style kind of revenue growth, and scale it as quickly as possible, and you don't mind that like you have to continue to fundraise every 18 months to 2 years for the like foreseeable future, then sure, you should raise VC money. And by the way, you're also going to get diluted. You're not going to own as much of the business by the end of it. You might own very little of it. Meanwhile, like a lot of people actually don't want to do that. They'd rather just like maybe raise a couple million from friends and family and then run a business that like maybe just like makes good money and they own most of it. And that's fine too. And I don't think we talk enough about just different ways of running businesses in this space, because I see so much stuff take venture money, get venture funded, where in my mind, like it didn't need to be that way.
I don't know if we have the time to touch on it, but there can be a hive mind mentality of like, if you're hearing what other people are doing and they're like, well, that's what I'm supposed to be doing as well.
Exactly. And nobody really shares the lows, they only share the highs. So we get such a skewed view of, what's going on in the market. And that's basically the thesis behind Second Opinion, that like I'm not interested in just, providing a catalog of company wins. I'm interested in like, what does it really take to make a business successful in this space?
Yeah, well, that's a perfect segue as we wrap up. Let the listeners know, what do you have going on these days?
Yeah, I mean, subscribe to secondopinion.media. You get my newsletter. I promise I won't spam you. It's a couple of times a week, and I do kind of deep analysis on the industry. I ask hard questions. Just before I spoke with you, I was just writing one on how, the question of how much time to spend with VCs before a capital raise. So I like kind of asking these sorts of operational questions and then kind of diving into the tactics and not just kind of the high level view, down to the level of, well, what percentage of time and how and why and when and all of these questions. So I'm trying to make it a little bit easier to build a digital health business by kind of exposing lessons from others in the industry who've had to learn it the hard way. So that's secondopinion.media. And then if you need, my help on the consulting side, reach out to me. I do a bit of work with companies as well. And then I also invest through Scrub Capital. So if you're raising a pre-seed or a seed, reach out to me as well.
Well, fantastic. Christina Farr, thanks for joining us today on Health Affairs This Week. And to you, the listener, if you enjoyed this episode, send it to a friend. And we'll just leave it at that today. Well, thanks and see you next week.